This is the 16th lesson in the series, and it is going to be the last lesson in the series. As usual, with every lesson, I request that you pause, take a few moments to read the disclaimer and become familiar with the various elements of the disclaimer. In this last lesson, we are going to be talking about value area range extensions. We talked a little bit in the previous lesson about ways to gauge the strength of a move or the momentum within a directional move, and we talked about several ways to do that. We tried to use the bands using the Keltner to do that. We're also now going to look at how the value area range extensions help us to get some clues about momentum, directional momentum in the market. Updates and new tools. These lessons are periodically updated and revised since there are changes in the market as well as changes in the profile tools themselves, and we will talk about some of those in this update, in this specific lesson update. Last but not least, we are going to talk about volume and the other time frame trader, or traders that basically move the market. They are described using many different terms and nomenclature. Sometimes they're also described as the smart money in the market. In any event, it is the market participants that have the greatest capital and the ability to influence the market the most, and certainly one of the best tracking tools for their behaviors and actions in the market is to be able to study and analyze volume for the particular instrument that you are looking to trade. Let's now take a look at value area range extensions and what information we can discern from these extensions relative to identifying momentum or strength of a move in the market. If we take a look at any market for any instrument, you will see that the value area for any session is not a static range. It is constantly changing. Value is either moving up or value is moving down. This movement helps us to evaluate the momentum and directional strength. We have to look at it, though, always relative to the prior period's value area. So the way that we gauge the strength or the momentum, if you will, is by doing a comparison from one period's value area to the prior period's value area. And this is how we determine how well the market is doing in terms of facilitating a directional trade in the market. Basically, there are 5 basic value area relationships between a current value area and a prior value area. The current value area is either going to be above the prior value area, or it is going to be below it, or it could possibly be overlapping with the prior value area, or it could even be completely engulfed within the prior value area. And sometimes we will also find that a new value area will overtake the high and the low of the prior period, in other words, extending both above and below the prior value area. If we take a peek here, and basically I am highlighting the different relationships. So we have our prior value area high, our prior value area low, and this is basically the value area here. And now prices begin to trade above value, and we establish a new value area that is significantly higher than the prior value area. In this case, we have strong directional conviction in the market. There is definite momentum in the move. So when you begin to see this, this should tell you right away this is a strong move and it hasn't really shown any weakness yet. Now, the same thing is true if the opposite is occurring. In other words, this is the prior value area. Here's my value area high. Here's my value area low. Here's the prior value area. And then, of course, here's the next or the following value area. And now look at what happened. It really has significantly dropped. So this tells us that there is strong directional conviction in the market to the downside. All right, very simple, very easy. Just by comparing the relative position of each of the value areas, we can also gain some insight into momentum in the market. Now, sometimes the value area will move a little bit higher, but we'll have an area that's sort of overlapping between the two. This still tells me that we have a directional market, but it's not as strong as one where the new value area is well above the prior area. So whenever they're overlapping, realize, be careful, the move may not be as strong as you might think, and you want to not to over extend in terms of future targets. Be a little more conservative. Same thing with value area overlapping lower. Hopefully you're beginning to get the idea. Here's prior, here's the current, and once again, it is lower, but there is a little bit of area that overlaps, and so that tells us that in reality, the directional move in the market is not quite as strong as, of course, if the two value areas were both apart and one was significantly lower than the other. Last but not least, actually not quite last, we have this one which is inside, and then we're also going to look at a value area which extends beyond value area high and value area low. So in this case, this is what we call an inside value area, and here's the prior value area high, prior value area low. Now take a look at this new session, and of course we're always comparing two equal sessions, whatever those sessions may be. If it's a full day session, so be it. It's a half day session. The proper way to gauge and to read this the strength or the momentum in the market is to do a comparison of apples and apples. So you're not comparing one half an hour to a 3-hour segment or half a day to a full day. You need to look at two equal periods. So here in this period or in this session, we have a value area that looks like this. The following session, the value area is well inside of the prior one. That tells me there's somewhat uncertainty in the market. There's no clear defined direction in terms of are we going to move up, or perhaps we may even move lower. Certainly not by the position of where the value areas are. There are other things certainly that we will look at, and we will discuss some of those other tools that help us to understand and identify that in the next course. But as far as what we can learn and discern simply from an inside value area, basically we're not quite sure at this point or at this juncture where the market is likely to move, and we have a consolidation. As a matter of fact, the range is even narrowing. We're not expanding higher or lower. Now, what if in fact, here's my prior period, here's the value area again, but this time value extends well above and value extends well below. This is a very volatile and also, once again, somewhat of an uncertain market. We're not quite sure what's likely to happen. More often than not, when we get this type of an occurrence, the market is probably looking at a move. So be very careful, very cautious when this happens, and then begin to look at some of the other tools and techniques to help you get more of an insight as to what is likely to happen in the market and where the market is likely to move. However, keep an eye open for this, and when it happens, realize that there's a lot of volatility in the market, and you'll even see that in the price of options. You'll begin to see them skyrocket. All right, new tools and updates. The profile is somewhat new, or relatively new, and as a matter of fact, as each year goes by, there are significant improvement in the tools that we use to analyze the profile, and also that we use to display the profile. Certainly any profile platform, and the one I am most familiar with, Market Delta, has made significant strides in the market and has added all kinds of new wonderful features. Now, certainly in this lesson, I cannot and do not have the time to go through all the new features since the last revision, but periodically I do update each lesson series to reflect some of the revisions and some of the new tools in the market. One of the things that's been added that has really been wonderful are the delta bars. The delta bars basically take the concept of the delta, which is really the difference between the total traded volume at the bid and the total traded volume at the ask, and create for us candlesticks on that basis. So the delta bars, for instance, if you take a look here and let's do a comparison, can give us some very interesting insights. Take a look at the actual 30-minute period bar up here, and again, this is a 30-minute chart, and if you take a look, the red is the 50 simple moving average, the blue is the 20 simple moving average, and the orange is the 8 simple moving average, just so you'll know what the averages are. But more importantly, what I want to focus your attention on is, take a look here. We have a large, in terms of price, red candle that has dropped and a little bit of a wick down here. On the other hand, when I take a look at the delta bar, take a look at how big of a wick I have. This indicates that there really has been a significant amount of trading at the ask, a lot more so than the bid, and that's why this is a much smaller body on the candle than we see up here. So that gives me some insight as to what might happen as far as price, and it becomes evident what happens in the next 3 candles after that. Take a look. After a delta with such a long wick, certainly we would expect prices to move higher, and sure enough, they did. The delta bars, understanding them, analyzing them, is very helpful, and there are lots of strategies that can be built around delta bar systems alone. Now, also, the profile indicator in Market Delta has seen some significant improvements, and there are a lot more options in terms of how you can show the profile. Here, when you select this button, there is a number of them. You're able to display the developing VPOC and the developing value areas. You're able to extend a number of naked key parameters on the profile. You're able to label each price with the volume that it has. Some significant changes there as well on the profile tool. We also have the volume at price, which can be a very useful and helpful tool. If you notice here, I have just included some of the possible options for the volume at price. But take a look. From a candlestick, all I see is really just a big wick. But look at the amount of information the volume at price gives me about what's going on in this wick. And a lot of this information is quite significant. Where, in fact, I had the greatest volume traded in this particular wick, what the changes in volume were, what the delta was, all very significant pieces of information. and very helpful to the for us in developing strategy. Market Delta has also introduced another key type of footprint based on volume imbalance. And I like the concept of volume imbalance very much because it is more in alignment, more in harmony with what is really happening in the market. And basically what the volume imbalance shows us is, rather than looking at the bid and ask on a horizontal level, it looks at the difference between the bid and ask on a diagonal level. So here, for instance, it really doesn't make a lot of sense to compare the 1932 to the 707, because when we look at the bid and the ask is usually up here a little bit higher, and the bid is down here below, and the proper two numbers that should be compared are the imbalance between this bid and this ask, not so much this bid and this ask. So the volume imbalance bars highlight for us whenever you see a green, it indicates I believe the default is about a 30% imbalance between the bid and the ask. And you have the flexibility also to adjust and change that percentage should you wish to do so. And that also can be helpful to develop other trading strategies. Volume is a significant tool, and we focus on that more in the next lesson and how we use it. It really helps us to refine our entries, and in selecting the appropriate price levels for an entry and an exit at the same time. Now, in the last segment of this lesson, we're going to talk about volume and the other time frame trader. We have spoken quite a bit in the earlier lessons about the other time frame trader and their ability to influence the market, and how important it is for us to be cognizant of their activity and their presence in the market. As a result, we are now going to look at another helpful tool for us that helps us to identify where and when, in fact, the other time frame trader begins to participate and to enter the market. Once again, I have a 30-minute chart here before you, and this could be any instrument, and what will vary only between one instrument and another are the numbers that you see. But the principles that we are discussing, the profile trading strategies that we develop, will apply for any instrument that you are going to look at that has the electronic data to give you the data that we are looking at, or the exchange that offers the data. So in this case, I'm showing again some volume imbalance bars for a 30-minute chart. And once again, I have a 50 simple moving average right here, the red line, and a 20 simple moving average. Basically, when I look at the chart as I see it now, it's really a whole bunch of numbers, and it's very difficult to do anything with them. Now, what I really want to be able to do is to identify when did the other time frame trader, or another term that we often hear for the other time frame trader is smart money, or market capital, or well-capitalized traders. When did they begin to participate in the market? Now, there are a couple of different ways that I can go about identifying that, but I am going to focus on one specific way right now, and that is using an indicator that I developed, which is known as the KVT, the Kepler Volume Tracker. Let me share with you a little bit of the thinking with the Kepler Volume Tracker so you have better insight as you begin to apply it. And by the way, the Kepler Volume Tracker is a standard part of the Market Delta platform. You do not have to pay extra for it. Once you understand how to use it, it's quite easy to use, and I'll quickly walk you through that process now. But the idea behind it, the basic idea was, how do I go about identifying price levels where the principal or the smart money, heavy capital begins to participate in the market? And I wanted to do it in a fashion that also looked at actual market data. So what I thought was, okay, I need to look at each time period in the market and compare this time period to other time periods in the past. So if I'm looking at a 30-minute period today, I want to look back and study the past 20-day time periods for this same time increment. And I want to be able to do a quick analysis on the volume levels that are traded during this period relative to the volume levels over the 20 periods ago. So my look back period is 20 days. And I chose 20 days because that's usually around a month. But then I also said, well, I also want to take a look at as many as 50 days, maybe about 2.5 months. I could do it for 10 days, 5 days, whatever time frame I find useful for my analysis. And this has a lot to do with the volatility and the level of trading activity for a particular instrument. And that's why in the setting for the KVT, I wanted to create that flexibility. I didn't want to use the approach of one size fits all. So the look back period, as you will see in a couple of moments on the KVT, has flexibility. It allows you to choose a different number of days. For the ES Mini, for example, 20 is a suitable number based on the data that I've collected. The last month tends to be the most relevant as to, or just the prior month to what is happening right now. So let's take a look together now at how the KVT tool helps us to identify these variations in volume during each period when they occur. The KVT will highlight for you the price level, and as you can see here, there are two colors on the chart. There is a dark green color and there is a light green color. Once again, not only do I have the KVT identify for us the increase in volume at a particular price level, but it also identifies for us two different degrees. The light green is a lighter, or what we call a level 1 increase. Level 2 is significantly higher than level 1. So I have a gauge, if you will, rather than just saying this is more, well, how much more beyond the average. And you will see here, for example, there were a lot of price levels where we had significant increases, what we call level 2. We had a couple of level 1s, but predominantly level 2s. This is a very significant occurrence in the market when this happens. Certainly, small time frame traders and individual traders are not going to create this level of activity. There is intensity here, folks. In this point in time, at these different price levels, we saw very heavy participation in the market, which was very unusual relative to other times during this same exact period within a day session. So I used the KVT to help me identify that. And you will notice not every period shows that. So here I had a little bit of significant participation. Here as well. Here, and once again here. And this is on, I guess, over here as well. Just on the candlesticks or on the periods that are shown here. There are really a multitude of different strategies that one can build around the KVT, and those are discussed in much greater detail in the next series of lessons. But I still want to share with you some of the basics in terms of how to use the KVT to your advantage. Now remember, this information is brought to us using an algorithm. The KVT is an actual computer algorithm that does these calculations. So no one else in the market is privy or sees this information that you do, unless of course they too have the KVT and have it on the same exact settings. So it does give you a somewhat, or let's say even a slight advantage in the information that you have. And let me begin to share with you what that advantage is. But first, let me show you how you can set up the KVT, because it really is quite easy. What you want to do in Market Delta is choose from the indicator window the multiple price highlighter indicator, and then highlight price with the Kepler volume tracker. And here the setting for level 1 is 20 and the setting is 30, and let's say we are going to look at the ES Mini. These two settings are in fact appropriate for the ES Mini. I like to use dots. You can change and use whatever visual aid to help you highlight that. Once you've selected the Kepler volume tracker, you always need to complete all the different settings. The level 1 setting, and in this case here 20, our second level 2 setting, which is 30. Once again, dot, custom dots, slices for 2 different colors. I always like to use 2 different shades of the same color. In this case, I am using the light green for the level 1 and the dark green for the level 2. The back testing period, the look back period, mentioned to you earlier, this is completely flexible. So you can set this for 10 days, for 5 days, 2 days, 1 day, all the way up to 50. And I put the 50 here in the example because this is the most number of days the program will allow. If you go higher, it's not going to work well for you, so do not exceed 50 days. Sometimes you may want to do 2 different charts. You may have one with the 50-day look back and another with a 20-day look back to sort of see really where the greatest variations have occurred. But you cannot exceed the 50 look back period. The identification marker, complete discretion. This is up to you in what you choose. There are a bunch of different options. Drop down the menu, select what you like. And the important thing is to be able to distinguish the 2 levels of variance. As I mentioned, my preference is to always use, just makes it easy to visually discern the difference, 2 shades of the same color. And back again to the same 30-minute chart that we were looking at earlier. I have reduced the chart somewhat so I can show more of the KVT, and it should be evident for you now where you see level 1s and level 2. And I had mentioned to you before that when you see this type of a aggregation, this is important. There's certainly heavy, intense activity that took place during this period in time, and what is even more significant is the price levels where this happened. And we'll begin to discuss that together, why that is significant and how that is helpful. Take a look. If we were to just simply draw 2 lines around this area of the heavy or the major participant activity in the market, what do we find? Well, interestingly enough, as we go to the left, we find that there was also, once again, significant activity at about this same level before. So as we begin to look within this range that was highlighted for us, we begin to see that there is significant activity going on within that range. These major participants continue to participate in this range, just at different points in time. But we're able to see that in fact they do come in at different points. Look at that. So all of a sudden, the first thing that the KVT helps me to identify are significant price levels, or price ranges, if you will. So right away, I know that this is an area of heavy activity. I need to keep an eye on it and watch what is going to happen. So that is the very first and the most basic way that the KVT can help me, by looking at where these heavy participants come in, heavy hitters, whatever you want to call them, other time frame traders, smart money, and take a look at that range. So I can begin looking at when they come in and study what happens to price. Now take a look. Also here is another area where I begin to see some of their participation at another level here. We've identified the areas of heavy activity, and now I want to look closely and interpret what that really means. Being able to identify the area is certainly useful, but what is even more important is, what does that really do for me? So let's take a look, a little bit of a closer look at what happens when we get this activity. Well, let's start at the beginning here. We have, in each of these periods, we're detecting a little bit of activity, a little bit here, a little bit there, and so on. So the activity begins. We recognize that there is some heavy participation. Now look at what happens here on this bar. Heavy participation, range extension to the downside. That is my first insight or inkling that these heavy participants are selling. Now take a look at what happens. I get a little bit more heavy participation here. Prices continue to drop. Okay. Well, let's take a look on second area of KVT, and what happens? Prices continue lower. If I had begun to see prices move higher, then it would be a different scenario. I would then detect that these participants came in as buyers and not as sellers. But to the contrary, prices continue to drop, and I don't see any more heavy participation. When do I begin to see the next series of heavy participation? Right here. And look at what happened after that period completed with this heavy participation. No range extension to the upside, a continuation to the downside. So there was selling here again. All right, so if I took a short here, up here somewhere, when I realized that the market was moving lower, and I came down here and I began to see this heavy, intense activity, when would I begin thinking about getting out of my short trade? If in fact I had begun to see, after this heavy, intense activity, prices take out the high of this period and start to move higher, then that would be time for me to capture my profits the minute that it is one tick above the high of this period, and get out. If the period concludes and I begin to see prices move lower, if I didn't capture the move from up here, it's probably not a bad idea, if I wanted, to get back in and try to capture some of the move lower, because the intense activity here actually ended up pushing prices lower, not higher. So this is where the KVT helps me to understand the heavy participation, the intense activity, which way is it really pushing the market. And I can tell by where the auction is going, where the ranges are being, what direction the ranges tend to extend in. And these are all 30-minute candles, as you can see. Now, here's when things start to get interesting. This is the fourth cluster, if you will, of activity, KVT activity, that we begin to detect. Now, why are things interesting in this period? And certainly, if I was in this trade taking a short and I began to see this development, that would certainly give me pause, and I would be far more inclined to get out of a short at this point than to stay in it. At minimum, this tells me there is going to be a retrace. So why did things get interesting all of a sudden? I didn't make a lower low. I didn't make a higher high. Yes, but we had heavy participation. There was no range extension lower. That in itself tells me that momentum for the move down has been halted. Okay, so that's what would lead me to get out of the trade if I was in fact in a short. I'm not getting a range extension lower. Now, I didn't get one higher, but nevertheless, I see heavy KVT. So in other words, these guys came in and they're buying. Not only that, did I not get an extension to the range lower, but I also end up with a green bar. I have a higher close than my open. So not only were they able to overtake the sellers and prevent prices from moving lower in the auction, but they also managed to close the candle green. So this certainly tells me that this activity was some heavy buying activity. When the heavy hitters came in, they bought. They weren't selling here. Now, take a look at what follows. Now, of course, I'm showing you this after the fact, but even with just these two candles alone, and with this information before us, it would have been reasonable for us to anticipate that retrace that I mentioned to you. So the KVT can give us some really tremendous insights because it helps us to identify when the key players come into the market. And these key players are powerful. They have the ability to impact the market and to change things in the market. This was obviously a powerful seller, as was the seller up here. Certainly more powerful than the buyer. And this is what happened. Prices continued to drop. Same thing here again. Powerful seller pushed prices lower. Now take a look. When we retrace and come back up, we're back into this zone of resistance. This is where the seller was. So not only did it help me to know when a retrace was about to occur, but notice, by being able to identify the key area of participation and where the powerful seller was sitting, when prices came right back to this area, were prices able to get back above it? No. That tells me this seller is still active. Look at what happened after we came back to visit this level of resistance, or where this powerful seller was. Prices continued to drop lower again. All right, so now that I see the influence and the effect, I know that this was selling and this was heavy selling. This is what the other time frame trader or the smart money, the heavy hitters, were doing. They were selling here. When we came back up to this level again, they weren't buying, they were still selling. So even though we do see some KVT activity here, look at the end result. Range extends lower, and we in fact drop below this level, and we continue to move lower. So this is really useful, helpful information. Now, we also had a buyer here. Remember, this is the buyer that actually brought prices back up to this level for the retrace. But this buyer was really overpowered here. They came back in here again. So notice, you begin to see the struggle between the seller and the buyer. and you are also able to gauge which one of the two is overcoming the other. The KVT, without it, you would not be able to see any of this or conduct this type of analysis. You'd have a bunch of numbers, and you really would not be able to gain the type of insight that the KVT offers. It is a useful tool. The more you learn how to use it and the different strategies for it, the more appreciation you will gain for it. So notice here, this buyer was overpowered by the seller, and what happened? Prices continued to move lower. So obviously this level of support did not hold, and this level of resistance held, and at some day in the future you can count on prices coming back for a retest here, but you will know that there was a seller here. When this seller is overtaken and prices begin to move higher, this is when I know the market is changing, and in fact it may be time to go long rather than short. This is really the essence or the heart or the core of the KVT as a tool, and how we begin to use it for different strategies. Now, I mentioned to you that there are other volume level tracking tools within the software. As a matter of fact, through the same window, you are able to set a level tracker, which allows you to go through and choose a specific volume level and say, okay, every time I get 10,000 to trade, 10,000 contracts, 10,000 stocks, whatever lot you have, whatever instrument, 10,000 volume at a price highlighted for me. And in this case, I'm looking at the same chart again, the 30-minute periods. I've left the KVT on, but I've added a variable of 10,000 volume tracker. So wherever you see the red marks, these are price levels where the volume traded exceeded the 10,000 level, and the software will track that for you. The most important thing I want to point out to you is notice how different those positions are from the KVT. They do not give us the same type of information. There are certain levels, yes, where they overlap, but look at all the KVT, all of the entrance points or the price levels on the chart that the KVT identified that just simply aren't there using the 10,000 level mark. You can experiment with different levels. You can do 10,000, 8,000, 5, whatever you like, but you will find that general volume level tracking is not as, in my opinion, as effective as the KVT. It does not give you that the ability to look back and identify significant changes relative to other time periods. That's the powerful part of the KVT. The volume level tracking is consistent across the board at any time, at any level, at any periodicity. It will work, and that's its strength. The KVT will only work on time periods. It will not work on any other type of periodicity. So keep that in mind. So as with all tools, each tool has its strength and its weaknesses. However, there are times when we are able to combine the strength of both these tools to help us even gain more sight into the market and market activity. This is the tool, the multiple price highlighter. The same one you would use to pull up the KVT is the tool that we would use for the volume level tracker. And basically you will get this window, and in this window you will be allowed to set the volume limit that you want right here, and this is a variable. You could do whatever number you want, and again that will vary based on the instrument that you wish to trade or whatever type of volume that you are going to track, again relative to the period or the session that you're going to look at. same types of settings. You will need to choose a style to highlight that, a color. You can also have other filters to show different volume levels. It's really quite flexible. It even gives you the option to have a signal action. When that volume level is reached at a particular price level, it will alert you, and you can come and sort of take a look and see what is going on the chart. So once you fill out all the appropriate options within the window, you will end up getting the following on your chart. Of course, this one has both KVT and the volume level tracking on it. Volume is a very powerful, very useful tool when it is used properly. And it takes a little bit of practice, but once you are able to sort of understand different volume patterns and track them, they do help enhance your trading activity a lot. I am now going to conclude our 16th lesson. I am going to share with you that really after these 16 lessons, I hope that you have an appreciation for the power and usefulness of the profile, but this is the basic knowledge that one must have to begin thinking about trading with the profile. There is certainly far more than what is in these 16 lessons, but at least this is the foundation that helps you get started and build upon it. You can use it to build your own strategies, extrapolate from it, create your own studies, and navigate the world of trading with it. I continually offer more advanced courses as things change and progress in the marketing, and as I refine and enhance the tools and strategies that I use. So these 16 lessons really are the first part in a series. There is another course that goes beyond the basics and focuses on specific trade setups and strategies, and I will give you an offer towards that course of $200. After completing this course, you may apply this discount towards the next course. The key to successful trading is education. The more you know, the better trader you will become. There are no magic bullets or silver bullets in the market. It is all about knowledge and the ability to apply knowledge. The more you know, the better you are able to negotiate and navigate through the market. With that, I will conclude and wish you the very best of success with your trading.